Taxes. Nobody really likes to talk about taxes. I think this is because they're boring and confusing. I'm hoping to make them a little less confusing, but I'm not sure if I can make them less boring. Washington State has the most regressive tax policies in America. 75% of our state revenue stems from sales tax, property tax, and taxes on utilities. This is due to an amendment to our Constitution from the 1930s that restricts how we tax property, and then decades of precedent that includes income in the definition of property. So I want to talk a little bit about how that impacts the accumulation of wealth and financial equity in our state. Washington State is home to 16 billionaires, including Jeff Bezos, whose personal fortune increased by more than $70 billion during the 2020 pandemic, but whose Washington State tax burden is equal to those living in poverty. He is the second richest man in the world, but his yearly salary of less than $250,000 a year leaves him in a tax bracket that's similar to most folks that live along the I-5 corridor. So in order to really understand why this is impacting Washington State this way, I think it's important to understand the difference between wealth and income. For most of middle America, our wealth is held in the value of our home and our real estate. So property tax, although it has strict guidelines in Washington State, it is the third largest revenue stream. So if middle class holds their wealth in taxable assets, the richest hold their wealth in stocks and bonds and intangible assets, which are currently not taxable under the law. In 2021, our state did pass an excise tax on capital gains. So this is a 7% tax on the sale of stocks, bonds, and intangible assets that exceeds $250,000. It exempts your retirement account, the sale of small family-owned businesses, real estate, and the first $250,000 in profits realized from that sale. It's clearly aimed at the very wealthy. It only affects about 8,000 residents. This is 0.2% of our population. That law has been challenged in court. In January, the Supreme Court heard arguments regarding its constitutionality. So if the tax is based on a realization of profit from the sale of an intangible asset, is it actually a tax on income? That's the question before the court, and they have not released their decision. So the clearest way to see the unfair burden of our tax law is to consider the fact that the lowest income families in our state pay about 18% of their income in taxes, while the wealthiest pay only about 3%. In an effort to offset that imbalance, Washington State created the Working Families Tax Credit. This is a cash payment of up to $1,200. It's similar to the federal earned income tax credit, except it allows for those who file with an I-10. An I-10 is an individual tax identification number, and this is most often used by our immigrant population. To be eligible for this tax credit, you have to file a federal income tax return. You have to earn at least $1. You have to be a Washington State resident. And you have to, if you don't have a child, you have to be between the ages of 25 and 64. The applications opened on February 1st. This will put money into about 400,000 working families in our state. There are income guidelines that ensure the lowest wage earners will receive the highest level of relief, and efforts are already underway to expand the credit to include those under 25 and to broaden the eligibility to include those who survive just outside the boundaries of poverty. So Washington continues to look at a more equitable approach to their estate taxes. The goal would be to eliminate taxes on small estates and raise the taxes on estates with a higher value. And currently there is legislation that is being considered that would create a wealth tax. So this would be a 1% tax on excessive wealth, which is over $250 million in intangible assets. This would apply to about 700 residents in Washington state, but it would raise $3.2 billion a year. 85% of Washington residents agree that we should change our tax code and increase tax on the wealthiest. And we agree because we know that even if the wealthiest among us leave because of an increase in taxes, it will have a very negligible effect since they pay so little already.